Hey everyone, and welcome. Have you ever looked at one of those financial charts and just seen a confusing mess of red and green bars? Well, those are called candlestick charts. And today we are going to completely demystify them. Seriously, by the end of this, you'll be able to read the story these charts are telling. Okay, let's just dive right in. So right off the bat, you might be thinking, why do we even need these things? Can't we just use a simple line graph? And you know what? That is an excellent question. The answer gets right to the heart of why these charts are so powerful for traders. Just look at this comparison. On the left, you've got your basic line chart. It's clean, it's simple, it gives you the general direction. But think of it like just the outline of a story. Now look to the right. The candlestick chart? That is the full story. All the drama, all the conflict, every single detail is in there. So what is all that extra detail? What's hiding in plain sight inside each one of those little bars that gives traders so much more to work with? A line chart, for all its simplicity, has a huge limitation. It only shows you one single piece of data for any given time period, the price it closed at. That's it. You miss out on the entire battle that happened during the day, the highs, the lows, the whole struggle. But a candlestick? Oh, it's a completely different game. Every single candle gives you 4 crucial data points: where the price opened, the absolute highest it went, the lowest it dropped, and, of course, where it closed. You are getting 4 times the information, which paints a much richer picture of what's actually going on. Okay, so we get it. Each candle is packed with data, but how do we actually read it? Well, think of it like you're learning a new language. We just learned the 4 letters of the alphabet. Now it's time to learn how to form words. So here's the key thing to remember. A candlestick is just a visual snapshot. It doesn't matter if that snapshot is for 1 minute, 1 hour, or a whole day. The candle tells you the complete story of the price's journey during that specific slice of time. All right, let's break this down. A candle has 2 main parts. You see that thick, colorful rectangle? That's called the body. It tells you where the price opened and where it closed. Then you've got those thin lines sticking out from the top and bottom. Those are the wicks, sometimes called shadows. They show you the full extent of the battle, the absolute highest point the buyers pushed to, and the absolute lowest point the sellers managed to drag it down to. And the color tells you who won that battle, instantly. If the candle is green, we call that bullish. It means the price closed higher than where it started. The buyers won that round. If it's red, it's bearish. The price closed lower than it opened, which means the sellers were in control. It's that simple. Okay, you know the alphabet, you know the basic grammar. Now for the fun part. Let's see how these candles team up to form patterns. Patterns that can give you clues about what might happen next. Think of these next 6 patterns as your essential trader's toolkit. Let's start with 2 big ones that often signal a trend is about to turn around. First up, the engulfing pattern. This is when a big candle literally swallows the body of the smaller one before it. It's a massive visual cue that the balance of power has just shifted dramatically. Then we have the pin bar. See that really long wick? That is a story of pure rejection. The market tried really hard to push the price one way, but it got shoved right back, leaving that long tail as proof. Both of these are like big flashing warning signs. Now let's look at a couple of 3 candle combos. The 3-bar continuation is basically the trend just taking a quick breath. You get 2 strong moves in one direction, a tiny little step back, and then boom, the trend often keeps right on going. But the 3-bar reversal is a totally different story. Here, you get 2 candles going with the trend, but then they're followed by a massive, powerful candle going the other way. That's a huge sign that the trend is running out of gas and might be over. And our last 2 patterns are all about momentum. Breakout candles are like an explosion. After a period where the market is quiet and undecided, you'll see a bunch of small candles. One giant candle suddenly breaks out of that zone. This can signal the start of a really strong new trend. On the flip side, you have shrinking candles. Imagine a car running out of gas. That's what this looks like. Each candle in the trend gets smaller and smaller and smaller, showing that momentum is just dying out. The trend is exhausted. So now you have these patterns, but here's the secret sauce. This is what separates the beginners from the pros. Just spotting a pattern isn't enough. The most critical question you have to ask is, where on the chart is this pattern showing up? And this is a huge deal. So many people make the mistake of trading these patterns wherever they pop up. But the most powerful, most reliable signals happen when these patterns form at key price levels. Think of them as historical lines in the sand, areas of support or resistance where buyers or sellers have made a stand before. A pattern at one of these levels, It carries so much more weight. So the pro strategy is actually pretty simple, but it's incredibly powerful. Step 1, you find a key level on your chart. Step 2, you patiently wait. You let the price come to you and test that level. And then step 3, you look for one of our 6 patterns to show up right there to act as your confirmation signal. And if you want to take it up another notch, you look for what the pros call a confluence level. This is just a spot on the chart where multiple key levels all intersect. Maybe a horizontal support line crosses a rising trend line. A good pattern showing up right there, that's an A+ setup because you have multiple reasons all pointing to the same conclusion.
Whew, we have covered a lot of ground, from the guts of a single candle all the way to a professional strategy. So let's just tie this all together with the most important takeaway.
At the end of the day, that is all this is. Every single chart is telling the epic story of the constant tug of war between buyers and sellers. It's a story of greed and fear, of momentum and exhaustion. And now you have the fundamental tools to start reading that story for yourself. So the next time you pull up a chart, don't just see a bunch of red and green bars. Look closer. Ask yourself, what's really happening? Now that you can read the language of the charts, what story will you see?